Hello, good morning to all. Welcome to today's Daily Dose of Market Insights by OANDA, presented by myself, Kelvin Wong, the Senior Market Analyst of OANDA Asia Pacific. So very good morning to all, and also as well as a brand new week ahead. So today will be Monday, the 23rd of October. So a very exciting week ahead. So before we start our Daily Dose of Market Insights, let's take a look at the disclaimer slides first. All right, leverage trading carries a high degree of risk and may not be suitable for everyone. Losses can exceed deposits. This presentation is not an offer or solicitation to buy or sell, nor financial advice or recommendation for any investment product. And as well as any forecast, prediction, or projection in this document is not necessarily indicative of the future or likely performance of the product. This advertisement has not been reviewed by the Monetary Authority of Singapore. Okay, so as usual, for those who are the first time joining us, this is the three key gists of our daily dose of market insights. Number one will be a recap of key highlights and events that took shape on Friday and Thursday, because I'm off on Friday. So what's the next key data releases, secondly, and as well as events to look out for today. And lastly, we'll round out with the short-term technical outlook on the broad-based asset classes, ranging from the benchmark stock indices, specific FX pairs, and as well as key commodities. All right, so now let's give a start about the events that took shape on last Friday first. Okay, so now let me share my screen for you all. Okay, so let's look at some key events that took shape on Friday. So what we see over here is that there's this data of United UK retail sales data. Okay, so now let me hide my camera so that you could focus more on the screen instead. Okay, so what I could see over here is that the UK retail sales data actually came in negative for the month of September as well, negative 1%, and it came in below expectation of negative 0.1% year on year. So all in all, what I could see over here is that it's a rather lackluster retail environment growth in UK, but despite the fact that the pace of contraction has started to reduce, how does it react to the market? The sterling dollar continues to remain bearish against the USD, where the sterling dollar pair refuses to actually break above the 20-day moving average on last Thursday and Friday. So later we'll touch up more on the short-term technical outlook on the sterling dollar. So one more data is pretty much important, will be key to the US housing market. What we could see over here is that US existing home sales, not home sales as in this is the nominal sales volume, not sales price. So we could see that the sales, we call it a volume, starts to decline pretty significantly since April this year. So on last a week, late last week release, this existing home sales came in at 3.96 million, which is slightly above expectation of 3.89 million, but the rate of decline is pretty significant. So indicating to us that the US housing market is getting vulnerable as well due to this higher level of interest rate environment. And we know that the US market is also one of the key component, indirectly key component economic sector in the US. So if the US housing market starts to plummet in terms of the sales value, potentially in terms of sales number, potentially it will lead to sales price to come down. So eventually it will have a negative knock-on effect on the benchmark US stock indices as well. So one more particular speech over here in Fed speak will be definitely by Fed Chair Powell. So Fed Chair Powell spoke on Thursday. So what he did mention over here is that he actually signaled Fed to stay on hold, but he actually that speech he actually portrayed was rather dovish, saying that potentially they may still have a future hike on the table. Okay, so i.e. that could actually mean that for this November, so if you look at the CME Fed Fund Watch over here, so this is available for public. You can just Google CME Fed Fund Watch. You're able to see what is the futures pricing right now in terms of expectation for the next interest rate hike or cut. So the next interest rate meeting will be next week at 1st of November. So at 1st of November, right, for sure now, based on the series of what I call Fed speak that we've seen the last 2 weeks. Now almost is a non-event of a no cut. So market is not expecting it to Fed to stay put at 5.25% slash 5.5%. Only 1.16% expecting only okay no 0%, pardon me, 0%. Even now 0% are expecting a cut, a hike, pardon me, a hike. So i.e. we are talking about almost zero expectation of a hike coming in November. But however, given the still rather we call it a hawkish vibe in last week Fed Powell public speech, this hike is still pretty much alive in the last 2023 FOMC meeting, which is to be held on 13th of December. So there's still a chance of a 24% chance of a hike to bring it to 5.5% slash 5.75%. All right, so that's almost the same about a week ago. Okay, a week ago is about 28.8%. So the latest one is 24.2%. Okay, so what we could see over here is what will transpire in the next few two meetings, especially the one on the December meeting, right after the Fed starts to potentially do a one last hike. Market will start to pay attention to the dot plot and as well as Fed chair press conference to give any indication of when will be the first rate cut to come in. Okay, so that's the key story then. But all in all, what we could see over here is that last week, we call it a whole series of news and we call it expectation for Fed funds officials, and as well as the geopolitical tension that is coming out of the Iran and Hamas conflict that is still show no signs of easing. It lead to a risk-off event. That means we start to see across the board sold off in the benchmark US indices, cascading to it to other global benchmark indices as well, in the German 30, in the Hong Kong 33 index, which we actually covered pretty much extensively in our short-term technical analysis outlook in this daily dose of market insights. And also the gold actually rallied to hit the key psychological level at this 2000 mark, XAU slash USD as expected. And the oil price, WTI crude oil price, in our platform we call it West Texas oil, also rallied to the $91 per barrel within our expectation. So the key story over here is still this, and the primary conduit, the primary key catalyst over here is definitely for sure this risk-off scenario is this rising US 10-year Treasury yield, which briefly hit 5% on Thursday before backing down around 4.91 or 92% on last Friday. So overall, for sure, the major and the medium-term trend trajectory of the US 10-year Treasury is still remains on the bullish path, which in the longer term, I mean for the midterm, from a multi-week and multi-month perspective, it may not bode well for the US benchmark stock indices and global stock indices respectively. For FX market is rather mixed because at the end of the day, we got this dollar itself is depending also on what will happen, take shape on the BOJ policy. So BOJ potentially there could be some intervention coming to play. Why? Because the dollar yen now is coming very close to the 5% mark. Not 5%, the 150 psychological level, the dollar JPY, where more potential cost of intervention may come into play to stem the slide of this yen weakness. And also do not forget over here is that we also do have a certain currency pair that are kind of what I call related to oil price, especially the Canada dollar, that could actually trade in a more wild swing environment compared to a broad-based dollar strength. And also primarily this ongoing we call it a geopolitical tension also benefited the Swiss franc, which is trading against the strongest against the dollar right now. Okay, so without further ado, right, let's take a look at the economic calendar. What are the key things to look out for today? So for today, right, calendar pretty much quiet on the European and US front. So on the Asia session, today Hong Kong is closed. Hong Kong stock market is closed. So that's why the Hong Kong 33 is not trading in our platform. So you resume trading again tomorrow when the Hong Kong market opens in the morning. So with that, Singapore CPI data will be out at 1 p.m. later. Then thereafter will be a pretty much quiet session in terms of when we hit the European session and the US session. Okay, and do not forget we are now still on the we call it limelight for key US earnings season. So we'll talk more about that tomorrow. So as a head start over here is that on Tuesday, at the close of the US trading hours, we have two of the mega cap stocks that could influence the Nasdaq 100 and the S&P 500 will be the earnings of Microsoft and Alphabet. They are actually due on Tuesday after the close of the US session. So we'll talk more about that during tomorrow Asia session during my daily market dose. All right. So with that, let's take a look at the key short-term technical outlook right now. So let us start with the benchmark stock US indices first over here. So let me go to the benchmark stock US indices. So let's start with the Wall Street 30. Okay, so the Wall Street 30 tumbled as our expectation and hit the support level at 33 100 160 level. Okay, so I could see right now is actually at the lower boundary of this short-term descending channel. So bear in mind that all these short-term technical outlook, we'll be looking at the 1 hour chart, but what I did over here is that I overlay a medium-term moving average, which is the 20-day moving average, to give a bit of multi-time frame analysis on a single chart. So interestingly, it hit the lower boundary and hit the support level of this short-term descending channel. And what we could see right now over here is that the RSI also hitting the oversold level and started to shape a bounce. So overall, what we could see is that we will start it indicate to us that last week decline has hit a oversold condition, and we'll be using 33,050 level as my key short-term pivotal support for today, looking for a potential counter trend rebound within this short and medium-term downtrend that is still intact towards the next intermediate resistance at 33,375 level. Above this level, potentially maximum could go up to 33,510, which confluence with the upper boundary of this descending channel and as well as the 20-day moving average. But however, if you start to see an hourly close below 33,050, then potentially we could see the continuation of this impulsive down move to test the next support level at 32,800. So potentially for the short term, we call it view for today is we'll be potentially flipping to a short-term short-term bullish counter trend scenario for the Dow Jones Industrial Average. Okay, now the Nasdaq 100. So the Nasdaq 100 similar as well. It came down and hit that 14,000. We call it 600, 14,000, 650 key short-term support level that we mentioned before I went on leave on Thursday, and prices now coming very close to this swing low area of 6th of October. But in a longer term basis, it's very bearish. Why? Because it broke below this former major descending trend line from December 2022 low. So indicating to us that this leg down from since July could translate to or to transform to something much more larger in terms of the magnitude of this ongoing downfall. So it could be the start of a potential major downtrend that could be multi-month. But we know that price action of Nasdaq 100 or even any we call it a liquid tradable instrument don't go vertical in an up move or a down move. They actually oscillate within a wave-like form. So given the fact that it's hit the support level that we mentioned on last Thursday, and what's interesting over here is that the hourly RSI also hit the oversold level and is now shaped a bullish divergence, indicating to us of some potential overextended decline in the short term. So we'll be using 14,530 as my key short-term pivotal support level for today, potentially flipping to a short-term counter trend bullish condition to test the intermediate resistance at 14,710 / 14,780, which is now the pullback resistance of this former major trend line support level that was broken down on last Friday. So however, if you start to see a breakdown below 14,530, then this short-term bullish counter trend condition will be invalidated to see a further slide to test that 4th of October and 28th of September swing low area in first step at 14,450. Okay, now given that the Hong Kong 33 is closed today, so I will not do any short-term technical outlook on that. Let's move on to the German 30. So for German 30, very similar as well. It came very close to the 14,800 support level, 14,760 support level that I highlighted on last Thursday, and now which is also the lower boundary of this medium-term descending channel that is in place since the high of 1st of August. All right. So with that, if you look at the hourly, RSI also starts to shape a bullish divergence as well upon hitting the oversold region. So indicate to us that last Thursday and Friday push down, there's a bit of what I call bearish exhaustion, kind of advocating for a potential counter trend rebound scenario, short-term counter trend scenario. So I'll be using 14,760 as my key short-term pivotal support to actually have this potential counter trend bullish scenario plays out. First resistance to watch 14,885, followed by 14,990, which is very clearly this pullback support, pullback resistance of this former swing low area of 19th of October and 4th of October. But however, if we start to see an hourly close, a breakdown of an hourly close below 14,760, then this bullish counter trend rebound scenario will be invalidated to see the continuation of this impulsive down move to test the next support area at 14,630 slash 14,520. Okay, now moving on to the FX space for today. So over here, so let us start with the euro dollar first. So for the euro dollar, what we could see is that last Friday, the euro dollar staged a bullish breakout above this medium term descending channel that is in place since 18th of July, and also surpassed the 20-day moving average as well. So indicate to us that the previous bearish vibe of this euro dollar that was seen on the 12th of October to 14th of October, there is less, we call it momentum for able to push it downwards, you see. So given it surpassed the 20-day moving average, so given the fact that it may start to trade sideways for now, given the very short term for today, so given the fact that bearish momentum has started to ease off with the surpassing of that descending medium-term descending channel resistance and the 20-day moving average, so I will rather turn neutral for today between 1.0635 and 1.0530 on the euro dollar. So if we start to see a clearance, an hourly close above 1.035, then potentially we could validate a much more substantial rebound to test towards the next resistance level at 1.0735, 1.0760. So hourly close, on the flip side, hourly close below 1.0530, then potentially we could start to see the resurgence of this bearish bias condition to retest 1.0490 and slash 1.0450. Okay, so that's for the euro dollar. So on the sterling dollar, last Thursday and Friday, it managed to hit our support level at 121.10, but then thereafter it refuses to go much down further and attempted to actually stage a bounce off. All right, so with that, it's still holding below the 20-day moving average, despite given the fact that much more bearish than the euro dollar, much more bearish than the euro. But given the fact that it tends to track pretty much closely with the euro dollar, and given the fact that euro has started to broke out above the 20-day moving average, we know that some of the most of the euro and the sterling will tend to move hand in hand. So in a multi-week perspective, so for today, I'll be much more cautious of maintaining that short-term bearish bias that we have on last Thursday. So I'll be flipping to a neutrality stance for the sterling dollar as well for today, below this minor range top of 122.20 and for sure 121.10 will be the lower boundary. So neutral between these two levels for today, unless we start to see a hourly close or a breakdown of the hourly close below 121.10, then then we could actually kind of validate this bearish bias condition to resume towards the next support level at 120.50, then followed by 119.60 further out. But however, if we start to see a clearance above 122.20, so what's the 122.120 is pretty much crucial. This minor range top that is in place since 13th October, as well as the upper boundary of this descending channel resistance that is in place since 14th of July this year. okay, which is this level as well. So a clearance above this 122.20, then we could start to see a much more substantial rebound to in first step to retest the 11 October and 30 October swing high at 123.30. So that's for the sterling uh, dollar. So for the other FX pair I want to highlight for you will be the dollar yen. All right, so for the dollar yen over here will be this. Okay, so the dollar yen, right, starts to congest in the zone. So still recall that previously we are looking for a bullish bias to hit 150.30. Now it's coming very close to it. So given the fact that that 20-day moving average is been holding on pretty well since this unconfirmed intervention by BOJ on the 3rd of October under the instruction of Japan's MOF to weaken the dollar yen upward trajectory. So we'll be using the 20-day moving average right now as a support level. So will be pretty much a tight range for today. So neutral range between one, given the fact it's coming very close to 150.30. So neutral between 150.30 and 149.40, which is now the dynamic support of this 20-day moving average. All right. So, however, if we start to see an hourly close below this 149.40, then potentially we could start to see a much more pronounced slide to test the next support level, which is the 5th of October and 10th October swing low area at 148.25. And also this 150.30 could be also potentially the risk of BOJ intervention as well. Okay, so we'll be much more cautious for today, given the fact that it's fast approaching this 150.30 level. Okay, so that's for the FX market. So very quickly, right, let's immediately jump on to the commodity market. So for the commodity market, let's start with gold price. So gold, right, we could see is that previously we will have this bullish bias condition at 1980 level, 1960 level. Price action hit this level, and where it hit that, it actually come very close to the 2000 level mark. This is the gold XAU/USD, which is the upper boundary of this short-term descending channel that is in place since 5th of October low. And upon hitting this channel over here, it also the RSI also starts to flash out a bearish divergence at the overbought level. So what I could see over here, right, this is a kind of a overstretched up move. We all know that price action do not always go up vertical. So it hit a resistance level at the 2000 level, and clearly graphically it also come very close to this region over here, which is this bunch of former support level breaks, turns into a pullback resistance at 2006. Okay, so I'll be using 2006 as my key short-term pivotal resistance for today, looking for a potential retracement of this 3-week 3-week plus of uptrend to retrace it down towards this region over here, which is the 200-day moving average, and also very close to the pullback support level of that channel that was taken out on previously on 13th of October. Okay, so this is actually the previous medium-term descending channel, this dotted gray line that was taken up earlier. And also, if I were to do the Fibo retracement from the low of 6th of October all the way up to last Friday high, it also confluence with the 38.2% retracement. Okay, 38.2% retracement over here. Okay, so oops, yeah, this level. Okay, so all in all, right, flipping to a bearish bias condition, potentially looking for this a retracement scenario to take shape below 2006 level. First support level 1947 breakdown, then it will actually ideally come back towards this retracement area. Ideal retracement area, which is to confluence the 200-day moving average at 1932/1920 before another potential new leg up move take shape. Okay, so for now, looking for that potential retracement to unfold in first step first. But however, if we start to see an hourly close above 2006, then this retracement scenario will be invalidated to see the continuation of this extended impulsive up move towards the next resistance at 2028 level. So that's for gold. WTI crude oil. So West Texas oil, we call it our platform. So price action indeed hit that 91 level resistance that we highlighted on Thursday, and now it really did that retracement. So this retracement is now coming very close to that 20-day moving average as well, and also to this former congestion area here. Now turns into a pullback support at 87.30. So I'll be using 87.30 level as my key short-term pivotal support level, still looking for this continuation of this short-term to medium-term uptrend in West Texas oil to retest 91 level, and above it potentially sees the next resistance at 92, which is this congestion area here of 2nd of October and 29th of September, and as well as the 76.4% Fibo retracement of that last down move to 28th of September all the way down to 6th of October. Right, but however, if we start to see a breakdown of the hourly close below 87.30, then this slight or pullback could continues much deeper towards the next support, which is close to the 50-day MA at 85.70, and also confluence with the ascending channel support that is in place since the low of 6th of October this year. All right, so that's pretty much a sum up for today's daily dose of market insights, which I cover the key highlights for today. So with that, have a great day ahead, and we shall speak again tomorrow. Thank you.